Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. The first one I'd like to look at is the euro against the dollar. An indecisive spinning top yesterday, comparable to the one on Monday, but 360 degrees the opposite. I would add that it might also be a possible hanging man pattern, though the jury is still out on that one. Perhaps the most interesting piece was where we closed. Not too different from the previous session and supported on a closing basis by the old broken but influential 2011 to date downtrend, currently at 118.04, and capped by the same old June 2018 high at 118.5. Today we're basically within those two areas, more or less unchanged at this time. Further down we have the recent congestion, 117 to 118 even, but it's quite diaphanous, though I suspect it may also be quite strong. The next chart to look at is cable, aka sterling against the US dollar. A second bullish white soldier yesterday. Once again, hardly surprising as we have the twin forces below coinciding and now expanding up and outwards. They are the still flimsy looking yet surprisingly sturdy April to June broken upper channel line, currently at 130.36, and the more acutely accelerating lower time, currently 130.74, of the important May to June bullish shift pitchfork. Topside, we still have the 50-cent Fibonacci line for the whole of the 2016 move at 132.33 and the newly minted 2020 high at 132.67. Today we're testing the top of that envelope once again. The next chart to look at is euro against sterling. A second bearish black crow yesterday and a suitable follow-on to the previous session's bearish engulfing pattern. As I've already mentioned this week, we've had an interesting set of developments playing out to a conclusion. The tussle over the last few weeks between the original bullish early June to mid-July shift pitchfork and the newer, more mildly late June to late July shift pitchfork seems to be finishing with the latter winning. The market is following the middle time of that declining shift pitchfork, currently at 90.03, rather than the broken lower time, currently 90.51 of the earlier shift. Yesterday's bearish action down to test the medium moving average, currently at 89.43, was the most recent manifestation of that. Today we're back down testing the medium moving average. Further down, we have the key 50-cent Fibonacci line for the whole of 2020 at 88.89. It seems the market is trying to fulfill the potential indicated last week when it made a weekly key reversal down. The next chart to look at is US dollar against the Indian rupee. An indecisive spinning top yesterday, but that's not the real news. Instead, it is today's action. So far, it looks like a combined bearish engulfing pattern and long black Mariposa, and is one that has punched down through all of the following. Okay, the big 50% Fibonacci line, the late February to April move at 74.26. The late April to date lower bearish channel line, currently 74.11. And the two key supports, the rising long moving average, currently 73.91, and the 50-cent Fibonacci line for 2020 at 73.84. We still have below the 50-cent Fibonacci line for the September 2019 to April 2020 move at 73.68, and the second lower bear channel line, currently at 73.65. One final thought. If we look at this week as a mini potential bearish halfway hesitation, then the possible target X for this would be in the 73.40 area. I'll leave that all at that there for you now for the moment. Next chart to look at is the US dollar against the Brazilian real. This chart continues to be one of my most complex. It seems I was not the only one who was surprised by Tuesday's move lower, as yesterday was a complete volte-face on the previous session. It ended up being all of the following patterns, all on the same day. Okay, a bearish Harami, a bullish opening white Mariposa, a bullish double, and finally a possible pipe bottom. The market also ended up closing back up over the combination of the lower time of the broken early June to late July Andrews pitchfork, currently at 560.08, and the middle time of mildly bullish early June to late July shift pitchfork, currently at 557.40. As I've mentioned before, there seems to be nothing much overhead bar the compound second level GAN number at 567 until the 585 area. It'll be interesting to see how today acts out. So in the meantime, good trading and stay safe in the markets and in real life.